Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 23rd of July 2020. And on Tuesday we published a video entitled Silver Flies Past $21. Where next? Where at the time, silver stood at $21.06 and gold at $1,840. Now, we pointed out that a number of analysts were predicting that should silver rise above $22, within 24 hours it could very well head for $25. And should it fall, it was strongly supported at $19.50. Well, at the time of producing this update, which is 2200 Hrs GMT+1, gold stands at $1,886. Having touched $1,899, just $1 short of that magical 1900 level, and silver $22.50, having actually been as high as $23.27. Well, let's take a brief appraisal of the financials, and then we'll talk something interesting about Comex. European markets basically closed flat with very little change. However, US markets have moved down between 1.2% to 2.3%. The Dow was down 353 points at 26,652. The S&P 500 down 40 points at 3,235. And the Nasdaq down 244 points at 10,461. The dollar has fallen yet again and is standing, the dollar index that is, at 94.81, down another 0.17. Now, yesterday's announcement of existing home sales was positive in that they rose from 3.91 million in May to 4.72 million in June. However, the weekly jobless figures actually rose again this week from 1.31 million last week to 1.42 million this week. Leading economic indicators for June stood at 2%, compared with 3.2% in May. So again, we can see some poor figures here, which are not surprising as the US has now faced over 1,000 coronavirus deaths for each of the past 2 days, and with the figures currently standing at 894, it looks like today will be the third day that 1,000 deaths will be exceeded, with on average 70,000 new infections a day. This has certainly spooked markets and caused investors to move towards safe haven assets such as gold and silver. So with gold virtually touching that crucial psychological $1,900 level, which we believe it will reach, it may very well also pull back to between $1,800 and $1,850 to at least pause for breath after its recent rise. We certainly agree with one analyst who quoted on his blog today, quote, "This huge breakout move in silver and gold is a massive warning shot fired across the bow for global investors," unquote. There is, on the opposite side of that argument about gold perhaps pausing for breath, the risk that once again Comex may find itself in a deficit physical position, which, whilst we know Comex can handle through its various mechanisms, will still put upward pressure on the price of gold. Looking at silver, it too has performed marvellously, and its price is simply shot through $22 and sailed through $23, but has corrected a little to current levels. Now, technically speaking, we have to be mindful that just like in gold's case, silver's RSI is in the overbought territory, and the risk of correction is elevated. Also, with the gold to silver ratio falling to as low as 81:1, well below what we've termed, to be frank, our predictable target range of early 90s, at least until the economy recovers, we may very well see a correction here, with perhaps silver falling back further, or at least not rising from this point as much as gold, relatively speaking, of course, in percentage terms. Now, in fact, the current gold to silver ratio has moved back a little towards 84:1, and a number of analysts are expecting this to rise again by the close of play tomorrow. But as we mentioned in Tuesday's video, anything can happen. You see, there is considerable support for silver currently at $21.15 and resistance at $23.25. If, however, silver should break beyond that, then the next major resistance level is not until $24.50. So you could see another spike of $1 in the price of silver. Now, earlier we mentioned the Comex, and it's worth reading an excerpt. It's a few minutes long from a company we've mentioned a number of times in the past on our videos called Bullion Vault. Now, this is what they've published today, the author being Adrian Ash, its Director of Research. Quote, headline, surge in Comex trading as gold price sets new sterling, yuan, rupee records, and silver up 19% for the week so far. Gold prices popped to a new 9-year record on Thursday, peaking barely $30 below September's 2011's all-time top of $1,920, and setting fresh record highs in most other currencies as new cases of COVID-19 continued to surge worldwide. The price of silver, meantime, peaked above $23 per ounce for the second time in 2 days overnight, up 18.9% from last weekend, before falling back 50 cents from that new 7-year high. Hong Kong and Tokyo today both reported fresh daily records for new cases of COVID-19, while Poland showed the most in over a month, and Iran confirmed a second wave is clearly underway, with 221 deaths on Wednesday alone after starting to ease lockdown in mid-April. Japanese yen gold prices came within 1.2% of January's 1980s record top, while in China, source of the SARS-CoV-2 pandemic, gold set fresh all-time highs in yuan at more than 413 yuan per gram. Weak local demand in the metal's #1 mining and consumer nation, however, kept that yuan price over $35 per ounce, beneath equivalent quotes in London, heart of the global bullion market. With the UK Prime Minister today visiting Scotland, which voted against independence in 2015 and then voted against Brexit in 2016, Boris Johnson says response shows might of the UK Union, says a BBC headline. That is, it shows the might of the UK Union. UK's pandemic planning an astonishing failure, says another, reporting today's findings from Parliament's Public Account Committee, 9 of whose 16 members are MPs for Johnson's ruling Conservative Party. The live UK gold price in pounds per ounce today peaked at £1,486 per ounce, 29.9% higher for the year to date, and 39% above the high reached as sterling collapsed in June 2016 on the EU referendum victory for Johnson's Brexit campaign. UK close to abandoning hope of EU trade deal, says the pro-Brexit Express newspaper, with both UK's and EU chiefs negotiators blaming the other for not moving on key issues ahead of December's end to the transition period following Britain's official exit this January. Indian gold prices also set fresh records on Thursday, with import duty and sales tax taking the cost of bullion for the world's #2 gold consumers further above 50,000 rupees per 10 grams. Gold for euro investors also pushed higher again, coming with €5 per ounce of mid-May's current record at €1,633. Giant gold ETF, the SPDR Gold Trust, yesterday expanded by another 0.4% to need 1,225 tons of bullion bars, the most since March 2013, eve of gold's steepest plunge in 3 decades. Cheaper competitor, the iShares Gold product, also grew, recovering the prior day's net liquidation of 0.5% to need 473 tons of backing. Also, from iShares Silver's largest ETF, meantime saw its shares in issue swell by 1.4% to spur an inflow of 224 tonnes on Tuesday, equal to more than 3 days' world mining output, to reach a fresh lifetime record of 17,082 tonnes. Now this is the important bit. The real move came in Comex derivatives, with futures contracts for New York settlement previously hit by traders switching their hedging and speculative positions to London's physical market, seeing a 41.9% surge in volume for gold and 41.5% in silver. Do not, this is me commenting now, do not underestimate that. Carrying on with the quotation, trading in option contracts, offering speculative traders still greater leverage to the money they lay out, meantime grew 318.7% in gold compared to Wednesday last week and rose more than fivefold in silver. So the paper markets are without doubt flying the price of gold and silver. With the US meantime ordering Beijing to close its consulate in Houston this week over accusations of espionage, US prosecutors said Thursday that a fugitive scientist accused of fraud and links to the Chinese military has fled to seek sanctuary in Beijing's consulate in San Francisco. US President Donald Trump called overnight for a surge of federal agents to try ending a rampage of violence in cities where anti-racist protests have continued on a near-daily basis. The mayor of Portland, Oregon, was last night caught in a tear gas attack, apparently not released by local police, while telling protesters that Trump deploying federal agents represent an unconstitutional occupation. End of quote. So, Comex derivatives, almost a 42% surge in the volume for gold and 41.5% surge in the volume for silver. And the option contracts trading, 318% in gold compared with last week and a 500% increase in silver. Now, at some stage, there has to be some pullback, but no one at this present moment in time can predict where the top of this latest surge is actually going to pan out. Our best forecast is still within this $25 bracket, but having said that, if the COVID-19 figures worsen even further, resulting in central banks having to give even more stimulus, then of course $25 can easily be beaten with silver, and we could very well see over the coming weeks gold actually exceeding its all-time high in US dollar terms. However, again, from a technical point of view, we're expecting a slight pullback. What do you think? Do share your thoughts. Obviously, we will be producing a video tomorrow, but on Saturday we'll be given a much more comprehensive weekly update. And we'll take into account exactly what has happened during the course of this past week and why prices have risen, even beyond those who generally within the marketplace thought there would be a very slow but gradual rise in prices. So until tomorrow, thank you for listening. And if you haven't already done so, please subscribe to this channel and press the bell sign so that you're notified of our videos as and when they are published. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.